Let's move on to G, or excuse me, E. I'm getting ahead of myself. Then we're moving on to F. Discussion of preliminary budget as proposed by Finance Committee. And that was in your packet, so now's the time to ask questions. Or
unfortunately, what you have is you have the state's report in here. You do not have our itemized budget in here, and that is a byproduct of not having so much power last week. We had limited availability of some of our softwares, and one of them that was not able to get for today was the itemized departments. One of the things you will see within the sheets, and I can kind of walk you through the sheets, is you can see within the sheets what's being proposed for different departments. If you turn to just the third page within the, you'll see re-estimates of expenditures. Those are for the current year. If you continue to break down to that, you'll see a page called re-estimate revenues. That's of course, the allocations coming in. And then once you get past that, you'll end up into the actual expenditures page for fiscal year ending 2011. That is the actual budget being proposed to you. You will see it'll be titled Expenditures Schedule, page 1, fiscal year ending 2011, page 2, and then the revenue detail page for fiscal year ending 2011. That in detail breaks it down somewhat by departments. The state breaks their budget reports down differently than we do. Just to give you an example, our weed care is identified as a health and social services cost, and is broken down into water, air, and mosquito control. That $1,500 would not be a separate category in and of itself in our internal budget numbers.
Yeah, because I saw like this cultural and recreation budget of the revenues or the budget of $254,000, and I'm thinking,
yeah, that's your.
Are we going to have like a opera troupe in here?
That's your library. That is your all your parks budget. That is your aquatic center, and that is the cemetery, all built into that number. And of course, you have to remember that the cemetery they also have there's some funding sources in there as well, outside of just property taxes that are included in the funding sources for that.
You're going to get us a sheet of individual departments then?
Right. Like I said, unfortunately, one of the fallouts of not having power for 3 days was that we couldn't get the data entered into the system. So I gave it to you, and this is the actual reports we turn into the state. So I presented it to you. This is what would technically be considered the state, what's presented to the state.
Adam, when do you think you'll have the other report?
Probably by the end of the week. We'll try to get
Can it be picked up in the office?
Yeah. Just a matter of having power. That's another thing. We have a computer that's not working too. And it is the computer with the software on it.
So if you want the other report, Adam says it'll be ready by the end of the week. It will be picked up here.
I'll let you know when they're ready. So that you can get it.
Okay. Are you ready to move on to G?
Oh, if you look, the two things I did want to identify on the list, I apologize, I didn't mention. The very first page, of course, is the certificate page for taxing purposes. Last year's property tax rate was $20.81 roughly, and this year we're proposing a $17.16 property tax rate, and that's per thousand. And then the last page on your grouping is the recommendation for community request. That's where the different public entity groups have put in requests for funds and what's being recommended out of that, the allocations. You'll see that is the next to last line is you'll see the requested and what they requested and what is being recommended as an allocation.
And we recommended either they held the same or they were less. There were no increases in any of those.
No, we got one increase, I think.
but we took it away from some
I think
else.
pound for pound, the difference, the
Yeah, 50
exchange
bucks,
was $50. Yeah.
Adam, as far as, the levy rate of $17.16 per thousand, that's quite a bit lower than what we were at our high, like, let's say, 5, 6 years ago.
We're about 30% less than we were a couple of years ago.
Okay.